Hello everyone. In this video, we'll see the continuation part of the theory under the process costing. Okay, in this video, we'll see the difference between process costing and job costing. What are the main differences between the job costing and process costing? It is an important question for your examination purpose. First one, specific orders. Job costing, job is performed against specific order of customer and not for the stock and sale. It's only for the, if there is a customer order, then only the production is undertake. Under the process costing, production is continuous and on mass scale for stock and sale. Production is continuous and for the purpose of the stock. Next one is the nature. Each job may be different and standardized. Under the job costing, each job is different, but under the product is homogeneous, identical products. Under the next one, cost center. Each job is the cost center. Under the process, each process is a cost center. Next, cost ascertainment. Costs are ascertained and collected for each job separately. Cost collected and ascertained for each job separately, but under the process costing, costs are collected and ascertained for each process separately. Under this, each job, under process, each process. Next one, when costs are calculated, costs are calculated only when a job is completed. Under the job cost, when the job is completed, then costs are calculated. But under the process costing, costs are calculated for each process or department at the end of each process. At the end of each period or each process, we are calculating the cost. And the next one, work in progress. They may not be work in progress at the beginning or at the end of the accounting period. There may not be work in progress at the end or at the beginning of the accounting period. May or may not be. But under the process costing, there is always some work in progress at the beginning and at the end of the accounting period, because under this one process relating to the another process. Next one, degree of control. Proper control is comparatively difficult as each job is different and production is not continuous. Proper control is comparatively difficult as each job is different. Okay, next we'll see the degree of control. Under that, proper control is comparatively difficult as each job is different and production is not continuous. Control is difficult under the job costing, but under the process costing, comparatively proper control is comparing to job costing, it's easy and standardized and is more stable. Next one is the transfer. There are usually no transfers from one job to another unless there is a surplus work or excess production. There is no transfer of there is no any transfer of materials or a transfer of anything from one job to another job, because jobs are different from one to another. But under the process costing, transfer of cost from one process to another is made as the product move from one process to another. It's compulsory. Transfer is compulsory under the process costing. These are the main difference between the job costing and process costing. Okay, next we'll see process loss and gains. Under the this section is very important under solving the problems. Process loss and gains. Okay, under the process costing. Okay, now we got some idea about the process costing, right? Process costing means we are preparing the cost or accounts for each processes differently. Okay, each process differently. Sometimes there is a possible to arise the process loss or process gains. Okay, now we'll see what are the types of process losses and process gains and what are the treatment for that under the problems. See, during the course of production, some portion of material is normally lost due to reasons like chemical change or chemical reactions, changes in the moisture content or evaporation, etc. The differences between the input quantity and the output quantity is called the process loss. The difference between the input and input quantity and the output quantity, the difference is called the process loss and process gain. First one, see, normal loss. First one is the normal loss. The loss which is unavoidable and uncontrollable in the process of production is known as normal loss. The normal is we cannot control or we cannot avoid the normal losses. For example, chemical reaction, shrinkage, spoiled materials, evaporation, etc. It is unavoidable to control. It is estimated and provided for in advance of production. It's not possible to control the normal losses. See, normal loss may be in the form of, say, first one, normal waste generally has no recovery value. It is often invisible. Normal waste, first one. Second one is normal scrap. Scrap is visible and it has some monetary value. Normal waste, there is no value, but under the normal scrap, this is the scrap visible and it has some monetary value. Next one, normal spoilage. It refers to those units which are damaged in the course of manufacturing process. The units which are damaged in the case of the manufacturing, these are the normal spoilage. They cannot be rectified. Which cannot be rectified. Okay. Next one, the normal practice is just to ignore the normal loss in the process cost account. We just neglect the normal loss in the process cost account. In the case of normal loss as some scrap value or realized value, the scrap value of the normal loss has to be credited to the process account. If there is any, we have to neglect the normal loss, and if there is any scrap value, we have to credit to the process control. It's the income, right? Selling of the scrap. Okay. Next, first one is the normal loss is over. Next one is the abnormal loss. Abnormal loss or abnormal wastage is that loss which is in excess of normal or estimated loss. Normal loss are estimated, right? It's the estimated loss. The loss beyond excess of normal or estimated loss, more than the normal loss, it's called the abnormal loss. Example, losses due to fire, negligence, breakdown of machine, bad design, inefficient management, earthquake, etc. These are the abnormal losses. The loss which is excess of normal or estimated loss. These are the abnormal loss. Next we'll see the abnormal gain. Okay, abnormal gain. Two types of losses. One is the normal loss, one is the abnormal loss. Next one is the abnormal gain. It is also known as abnormal effectiveness or abnormal efficiency. It is the excess of units produced over the expected units of production. We may produce only 20 units. There is real production is 22 units. The 2 units are the abnormal gain, more than our expectation. If the production is more than our expected products, then it is the abnormal gain. Then we see some equations in process account. Some equations, these are the very important at time of solving the problems. Okay. In detail, we'll see at the time of solving the problems. Okay. Theoretical, we'll see here. Main equations under the process account. See, first one, normal production. How to calculate the normal production? Input in units, normal loss in units. Input minus normal loss, then we will get the normal production. Cost of normal production, total cost minus scrap value of normal loss. Scrap in this is the second one is the in rupees, right? Total cost in rupees minus scrap value of the normal loss in units. This is the cost of normal production. Next one, abnormal gain or loss. Actual production in units minus normal production in units. Actual production minus normal production. It is if there is a positive value. Okay, that is if there is a positive value, that is the abnormal gain. If there is a negative value, that is the abnormal loss. See, abnormal gain or loss is equal to actual production minus normal production. Abnormal gain means actual production minus normal production, same. But if there is a positive value, it is abnormal gain. If the actual production is more than the normal production, then it is a abnormal gain. And the abnormal loss, actual production minus normal production, if there is a negative value. If the actual production is less than the normal production, then it is the abnormal loss. Next one is the transfer price. How to calculate the transfer price? Cost of normal production divided by normal production in units. Cost of normal production divided by normal production in units. It is the transfer price. Okay. Okay. This is about the theory part of process costing. From next class we'll see the problems under the process costing. Okay. Only the under this meaning, features, advantages, disadvantages, application, then difference between the job costing and process costing, and the process cost loss, normal loss, abnormal loss, abnormal gain. These are the things we covered under the theory part of process account. We'll see the problems under next class. Thank you.